joining us. I really want to find out who's in the audience and what you do. So I would launch poll number 1 just to find out a little bit about you. Give you a few seconds there. Close the polls in 5, 4, 3, 2, and 1. Cool. So I see you're mostly from Quebec and Ontario. Welcome, welcome. A good portion of you are students. Glad to have you. This is a university series and some professionals and entrepreneurs. So fantastic. So thank you so much for joining us. It's good to have you. And if you're new, welcome again. So for those of you who do not know, this is Investor Save, Financial Freedom with Fintech. And it's really about financial inclusivity, how technology is helping to break down the barriers for those who are consumers and looking to invest or have questions about whether I should save or should I make a purchase or should I invest in something. So a little bit about our series. It is actually in conjunction and in collaboration with a whole bunch of universities across Canada. So it wouldn't be possible without them. So a big shout out if you have an interest in any of these student clubs and associations, you can check them out on our events page and the links, they are co-hosts as well. So there's a link to their event page as well. Our agenda for this evening, we have an introduction by us, Fintech Cadence. And we're kind of an interesting format this time around. It's a little bit different. So we have 3 panelists, and we're going to start off with Jennifer McDonald, COO of Milo Technologies for part 1. And for part 2, we're going to have a discussion between Matt Hernandez and John Kelly. So it's a little bit different from our other sessions. It'll be divided in 2. And if you have any questions throughout, we will have a QA afterwards. So you can write them in the chat if you have questions, and then we have Pascal and Marina in the background from our team, and they're going to take note of your questions, and we're going to address them in the QA session, just so you know. So there's going to be no break between part 1 and part 2. It's going to be a really fast session to make sure we get all the good content in on time, and then we'll adjust everything at the end. So if you don't know, we are Fintech Cadence. We're a nonprofit incubator based out of Montreal, and our focus is really building Fintech products that for the future Fintech leaders. And what we do is we do that through education, support, and collaboration. And we have several programs that help support that. But one of our biggest ones that's coming up on May 28th is our flagship Formathon program. And it's really addressed and designed to help address real Fintech challenges in the industry today. And they're presented by real-world mandators. So on May 28th, you can have the opportunity, 100% online, virtual, to take part in this amazing competition. It's basically for those who are interested in Fintech entrepreneurship. It's a great way to learn about the ecosystem, find out how to create a product, form a team, and launch a company in the future. We have 2 different ways of doing this. So either you can do research if you really want to do a deep dive on Fintech topics, or you can even create a company. We help you create a team together and then launch that company in conjunction with these real world challenges that we see today in the Fintech ecosystem. We have the challenges ready for you. So if you are interested in joining, we have for the startup track, how can we support Canadians in rebuilding their savings? How can we increase security in financial applications? How can we prepare Canadians to catch up and manage their student loans? Very important for us students. And within the research track, we have how will the uptake of open banking be impacted by COVID-19? How can we support entities with managing and issuing and tracking loans? And we have a new one specifically for AI in conjunction with AI Launch Labs, which is how might we help children understand the importance and value of money through conversational AI. If you are interested, it is a 3-week program, and it's really made to be accessible and open to everyone who is interested in Fintech. So we are there to help you with it, as well as create the teams. I am going to see if you are interested in joining by launching another poll. So bear with me 1 second. If you are interested in the formathon, let us know. And which challenge might you be interested in? I'll give you a few seconds to finish that up. I've done it myself, and honestly, it was one of the best experiences I've ever had in terms of entrepreneurship. I had a small company afterwards as well, so you have the opportunity to even create a startup and explore what fintech is all about. It's a lot of fun. So thank you for the poll. We'll end it in 3, 2, 1. Awesome. Thank you, everyone. So without further ado, we will introduce our panelists. So we have Jennifer McDonald from the COO of Milo, John Cowley, founder and CEO of What If I, and Matt Hernandez, founder and CEO of Sprout. We're going to start off immediately with Jennifer. So Jennifer, I'm going to bring you in. If you can, I'll ask you to start your video. Can you hear me, Jennifer?
Yes, I can. Thank you.
Wonderful. Thank you for joining us.
It's a pleasure to be here.
So for those who don't know you and don't know Milo, I would love to have you introduce yourself and what you do at Milo.
Great, happy to. So Milo is a startup based here in Montreal. We've been in the market since about 2017, and we've been growing really fast. We're a personal finance app, which is focused on helping millennials to achieve their financial goals by making it easier to automate savings and to invest. And we do that by helping people to invest their spare change. So you just download our app, you connect your bank account to it, and then each time you're making a purchase, we're rounding up to the nearest dollar and then depositing it into an investment account for you. So that's been a really fast growing strategy, and we have a lot of users coming on board. We're national in Canada and just growing really fast. And I joined Milo about 18 months ago as Chief Operating Officer. So the company had already been in the market for a little bit over a year at that point. I was really keen to join because I'm really motivated by building inclusive financial products. So at Milo, I'm responsible for the product engineering and customer success teams. And we've been building out a really strong team to be able to support future growth. In my previous life, I worked in emerging markets on tackling some of the problems around the 1.7 billion people that don't have a bank account internationally. So my last gig was developing mobile financial products with banks and mobile phone companies in Africa, Asia, and Latin America. So I've done a lot of international work, and it was great to be able to bring some of that experience back home to Canada. Some of the projects that I've worked on had scaled a lot. We've designed and developed mobile savings products that brought 1.2 million people into the financial sector, many of them for the first time. And so I'm looking forward to helping Milo to scale in a similar way.
Wow, that's really fascinating. And I think it's really quite relevant to our topic tonight, and especially financial inclusivity and access to services, and especially how does fintech help invest or save. So we're going to kick it off a little bit about the topic. So saving and investing. First question, does technology offer enough support to help consumers really achieve financial freedom? So what are your thoughts?
So I think the reason that I'm so excited about working at a tech company in financial services is that it's an industry which has been doing the same thing in the same way for a long time. And particularly the new generation of consumers coming up, you know, those ways of doing things aren't resonating anymore the way that they used to. So, you know, the users that we work with, they're looking forward to having an experience which is fully mobile, which allows them to do everything that they need to at a time that's convenient to them, that gives them a lot of transparency and makes it easy for them to do things. So with technology, we're able to really redesign the way that financial services work. And I myself am really optimistic about the opportunity to let people look at financial services in a completely different way. You know, what if your financial services helped you to reimagine your financial life? What if it helped you to do things that weren't possible with the typical bank account of the past? So a couple of the things that we've done at Milo that I think are really indicative of that are, you know, when the product was initially being developed, most people for setting up an investment account it was necessary to have a phone call with the company that was providing that in order to do the KYC and verification processes and set it up. And Milo, our team, went to the regulators and really made the case for why that was no longer necessary to be able to open up an investment account. And we were the first financial institution in Canada to enable people to open an investment account that was a fully digital process through your phone. Similarly, there have been some other ways that that processes are evolving. That's really positive. Some regulations changed last year, which made it possible for the first time for people to, sometimes it's necessary to provide ID in order to set up those accounts. And in the past, that was an issue where we had, not kind of very paper-based processes that were hard to manage. And the financial regulations changed now so that it's possible to just take a photo of yourself and take a photo of your driver's license or other ID that can be sent, and then do that process entirely through the app. So those are ways which technology enables us to to basically bring financial services to people in a way that's going to be more intuitive for them and more relevant.
And I think that what's really interesting is, I guess we're so used to it now, but we don't appreciate how easy it has become. And thanks to companies like yourself and how this is lobbying and pushing and really trying to get the technology available so that we can easily access these products and services. So what's out there? So you were mentioning a bit about like ease, like your customer and not having the verification. What else have you seen right now, which is really starting to break down that barrier?
So I think what's interesting is that we've seen a lot of different players come into the market with services that are aimed at helping people to get started with investing, and in particular ways to make it easier to nudge people to save on a regular basis. So most people know that these things are important. It's sometimes difficult to save because it's difficult to prioritize that when you have a lot of other things that you'd like to do with your money or different financial pressures that are there. So it's not that you don't know that it's important, it's that it's hard to do. It's just like, it's hard to go to the gym every day, even though you know that would make you feel great. It's hard to, get up and do your yoga in your home during COVID, even though you know that would be the thing that helps you.
I'm trying.
Yeah, all of us are trying, right? But sometimes but it's hard to do. There are various different ways to automate that or to find other ways of saving on a regular basis, and that's something that's worked really well for Milo. So our roundup approach is a way to really automate your savings so that it's happening every week. And that means that, you don't feel it at the time, but you see how it adds up over time. And for many people, we get messages from users who are saying, this is amazing. I've never been able to save before, and now I'm able to do that for the first time. And similarly with investing, so the typical things that we hear are people, saving for the first time, and then people getting up and running with investing for the first time as well. Yeah. Most people say, I know that I should be investing. I know that I should be in the market. That's where I'm going to be able to see my money grow over time. But I don't know where to get started. I'm worried about if I have enough knowledge to do it with confidence. And I think that I need to have a certain chunk of money, like maybe $1,000, couple thousand, $3,000 or something, to be able to get up and running. And right. These types of services like Milo and others that are in the market really make it easy for people to just get started with the first amount that they have. So at Milo, if your first deposit is $10, and that's immediately being invested for you into a diversified portfolio of ETFs.
Yeah, I know even for myself, I don't think I have invested until I started seeing the Milos and the Wealthsimples on the market. Like I didn't even think about it really. I would do perhaps a direct investing on certain stocks, but it wasn't a concerted effort and it wasn't planned. And I think that's something that, for our attendees here and for those who are watching, it's really, you have to start somewhere. So that barrier to entry, by lowering it, we can really include more. So those are, you mentioned a few, so which is like the roundup as well as the lower cost as well, that initial cost. So what else do you see, in terms of what other financial vehicles do consumers have access to?
So we've been looking at this quite a lot for ourselves in the recent period. We know that the financial situation is going to be changing dramatically over the next little while, particularly with with so many people finding themselves, their working situation has changed. Some people are being furloughed or finding that they've lost maybe different short-term job opportunities that they had. So we've been really looking into how financial needs are changing and what else might be necessary to be able to move ahead to reaching your financial goals. And we're really thinking, not in terms of how do you save money, but how do you achieve those things that everybody wants, right? Like moving out of your parents' home and getting married and having kids and all the good stuff that adds up to, adds up to just having a good life, right? Like how do you live your best financial life, whatever your circumstances are. So what we've been seeing is that there's been a lot of focus on reducing personal spending and on really trying to stockpile available cash to be able to see your way through the crisis. So that speaks to the point about having emergency saving, but also finding ways to reduce or to control your spending. And so we also see lots of opportunities for that. We keep a very close eye on the fintech trends in other markets, and we're continually looking, both listening to our users as well as looking for other ways that we can help. Sorry,
I was going to say, well, just on the topic of trends, actually. So what do you see so far in Canada compared to abroad?
I think in Canada, there have been a couple of new entries to the market. There are some things that we're working on and others that we see others doing. In general, we're seeing a trend towards more broad fintech propositions. So maybe in the past, there was a lot of focus on one narrow activity, and we're seeing more diversification. So companies looking to broaden their proposition to meet different needs that people have. We're also seeing some incursion into other areas. So an example would be, Coho just recently offered Dialogue membership so that you can get telemedicine access, as a premium subscriber for Coho. So we're seeing both diversification. So not just, maybe it was just investing and saving, and now it's getting into other areas, and some even getting beyond that into wellness and other things.
Yeah. So the bundling of services is really interesting now.
Yeah, that's exactly it. So for ourselves, the things that we're looking at are what are the things that are most important to Canadians. We know that the way that you move ahead to meet your financial goals is going to change as the economy continues to evolve. And we're focused on a few different areas, such as we know a lot of people are grappling with debt. We have very high personal debt rates here in Canada, and a lot of people are really struggling to get ahead with that. So that's an area that we're looking at, as well as helping people to get access to financial advice when they need it. So those are some of the things that we're working on as we move into the next phase.
That's really interesting, and I guess it's super important now and very relevant is like you said, debt management and being able to manage your finances. And so we touched on so a lot of these things are perhaps unknown. So how do people become educated, and can technology help with that for the planning purposes?
So I really believe that adults learn by doing, and we learn through experience rather than through sitting down and reading a book that thick or something like that.
Sure.
So I believe that that's the best way to develop fintech propositions that are going to really work for consumers. Is how do you rather than telling, how do you show, how do you let people get experience of something and try it? And that's very much the principle that we have with what we've developed at Milo. So let people have the experience of investing and see how that's working for them and gain confidence with it. We hope that many people go on to do self-directed investing and other types of things like that. But in the meantime, we're focused on delivering a service that will help them have that experience.
Yeah, absolutely. Well, like I said, self-directed, I've tried myself, and it's very scary, right? And in the days where stock picking and you go through your broker, and there's a fee associated with it, and there's an emotional toll, I think, because you see its fluctuations. So has there been a shift more towards automation, would you say? Has there been a shift towards making it, sort of like magic, right? When I think of user experience, and it should almost be magic, right? And it's to the point where it's so easy that you don't see that you're actually picking stocks, right? So how is that automation help people with the ease of that psychological hurdle?
So I think the kind of principles around passive investing are passively managed funds are quite interesting, because with that kind of mechanism, basically you're getting the benefits of a diversified portfolio and rebalancing, but you're not paying the fees that are needed to have actively managed. And if you apply those same principles to your own investing, then that's a good approach. There are very few people who successfully time the market. That's, the market tends to move together. So it's a difficult thing to do. And most people get the best returns when they set some long-term goals and sort of stick with that, and basically ignore all of the noise and what comes and goes. So those are the kind of principles that our portfolio management team at Milo is using, and that we believe are the right things for most consumers that are getting into the market.
Right. I think that's what's very important about fintech apps these days. Whether an app or even if it's a service, and like you said, is making it like automatic and almost like a process. So the rebalancing, as you mentioned, most people would not be able to rebalance a portfolio in a crisis. And especially now with COVID-19 and people's finances being a little bit more unpredictable, and with volatility, I think that's very important, is that everything is handled for you. You don't necessarily need to read up on Warren Buffett's book or follow his methodologies. You can, the rebalancing and the constant investment are done for you, right? And that's why I love fintech. And I hope that people appreciate that, because we did, like you said, the days when we had to call people on the phone to make that choice, they exist, and so we're living in a good age because of that. And so, what's the future look like? What's the next step for Milo and for fintech apps? Would you say what's the next stage now that we have that that automatic portfolio selection sort of thing?
So I'm really optimistic about seeing a lot more innovation come into the fintech market. So we're seeing some companies really mature, and many of them are offering a really interesting range. So simple, easy to understand products that are trying to meet a range of needs. That's the approach that we're working on at Milo as well. We're seeing a lot of incursion, different companies moving internationally. So that's also a step that we're looking to take at Milo, where we have the vision of being a simple, easy to use personal finance app that covers a range of needs for you, and that is available in various markets. So that's a step that we're looking forward to in the near future. Fantastic.
The one-stop shop.
Yeah, exactly.
Cool. Well, thank you so much. So as mentioned, we'll have two parts. So Jennifer, thank you so much for being with us for part one and the introduction. And I think the knowledge that you gave and what's the different types of the barrier to entry and what the landscape looks like a little bit have been much appreciated. So the audience is, like mentioned, if you have questions for Jennifer, please stick around, because we will have a Q&A afterwards. So thank you again, and I'll speak to you in about 20 minutes.
Great, thanks.
All right. So up next, we have John and Matt. So if I can ask you to join us, John and Matt.
I think you still have our video disabled there now.
All right, hold on one moment.
All good?
There we go. Welcome, welcome. So for the audience, so again, thank you for joining us. So John from Whatify and Matt from Sprout. So what I'm going to do is, again, ask you for 30 seconds. I'll start with John, because you're the first one I see. Can you tell us a little bit about yourself and Whatify?
Yeah, sure. My name is John. We're a Vancouver-based fintech. Hence the sunshine behind us here. My background's a bit unique. I come from the feature film, visual effects, and television industry. So Whatify is a mashup of some of these highly interactive tools and software that we use in the film industry, combined with Finance 101. So Whatify is a highly visual, formula and spreadsheet-free connect the dots style platform to calculate multiple financial scenarios and plan the best path to the results. Think mind mapping meets Excel, but the sugar that we add on top of that is a lot of social feedback. So third-party API integrations, social feedback on decisions, because the decisions we make in life aren't just financial, there's social feedback, there's ranks and reviews, and we combine those all together in one singular platform.
Thank you. Perfect. Matt.
Yeah. So hi, everybody. I'm Matt Hernandez, the founder and CEO of Sprout. We're basically an early stage fintech where we help you understand your real monthly spendable so you can enjoy your life and still hit your financial goals. Myself, I'm actually a former accredited financial advisor and actually stopped that route to actually focus on the fintech side of things because I feel that there's a huge opportunity and we're just at the beginning of how financial technology can really help people with a lot of the problems that they're facing today.
Fantastic. Awesome. Well, thank you both for being here. And so for part 2 of this, because we did a little bit of an introduction to the ecosystem, what type of fintech is available and processes for people to save and invest sort of in automatic fashion, and the lower barrier to entry. So now we're going to touch on with you two, I think is fantastic with your background, is really making informed decisions and the psychology of money and how technology sort of helps with that aspect. So it's a little bit more of a deep dive on those topics we talked about for part 1. So we'll see how this works. Since there's 2, I'm probably, what I'll do is I'll say the question, and whoever wants to go first, jump in. If not, I'm going to point you out. So number 1 is, how do individuals currently find financial advice? So we talked about education before, and you both have, for you, Matt, you have the background in it. So I guess let's start with you. How do people find financial advice now, and how does technology change that?
Sure. So I would say, traditionally, most people really didn't get any financial advice unless it was either coming from their parents or their parents' relationships, whether it be with their own financial advisors or in those family circles. So that's definitely something that I've seen over the last probably 5 to 7 years, where technology has really been able to, for lack of a better word, get to the masses, especially information and understanding. I think we're still at the tip of the iceberg when it comes to financial literacy. We've seen some great steps come from some of the governments where we're really trying to include it into our curriculums. And I think that really needs to be pushed even harder. But now I think where you go get financial advice is very different. I think people are they're beginning to open up a lot more about the problems that they have, whether it be that there are more people with the problems and that's why that's happening. But it's a good thing, because what people fail to realize is that sometimes money problems are very personal and can be, bring on feelings of embarrassment. But the reality is, and the numbers show, that a lot of people are probably in your same situation. So once you kind of get out of that embarrassment phase, you can really start talking with people, figuring out ways you can do things, creative ways, fun ways, as well as, get rid of that lonely feeling that you're not a person on an island that only has this issue. A lot of people have the same issues that you would have.
John?
I think a lot of it's about sort of self-discovery now. So back in the day, you had to turn to somebody and ask them a question and run the risk of feeling embarrassed, to Matt's point, or pretending you understood the information you were getting and walking out and actually not making a decision still. So there's wonderful tools out there, whether it's as simple as the internet, some of the things that are being built today to let people self-discover what's kind of going on and understand deeper. There is a huge stigma in our preamble before we talked about a podcast I listened to, and there's a woman from New York, and she was interviewing people on the streets of New York. And her first question was asking them about sexual related kind of questions. And people would spill the beans on all of that. And then she'd ask them, what's your bank account balance? And they would say, that's too personal. Sorry, I can't talk about that. So there's a theme there. And I think the fact that now you can, in anonymity to a degree, start to share things. You watch some of the Reddit threads that are out there, people will share their personal finance stories and ask for things. So there's a wonderful opportunity for software and technology to fill that, to create platforms for that communication, whether it's anonymous or at least hidden behind the pixels, to self-discover what those opportunities are with some nudges and guidance from professionals. Cool.
And what, we were discussing about saving and investing, and 2 different things that we can do. What I mean, we talked about this in our discussion, but what are the big ones? What are the big ways that people can get advice on? Like we mentioned that there's kind of like 5 categories. So what are the main things that people ask about when investing or saving?
Start on that?
Sure. So from our research and our company research, one of the biggest things that we try to focus on answering, which has come from how much can I safely spend? That seems to be a very prominent question. And it was something that at first we really weren't focusing on. But when we really see the different challenges that we're seeing with different ways of the new gig economy, a lot more side hustles, a lot more income is not coming in those traditional reoccurring every 2 weeks or every semi-monthly. So people have a lot of different challenges and issues just managing all of their reoccurring payments, all of their different things. And so that's kind of where we feel that focus is on just trying to start from the bottom, is really understand those core questions like how much can I safely spend? How much do I need to save to hit these specific goals that I have? And then from when you start there, you can either, go backwards and look at what is going on with your finances and can you tweak things, or how are we just going to move forward and maintain what we have and don't add on any debt and still be able to enjoy our lives.
Right. And those small decisions, right? I think, John, you were mentioning as well in our talk earlier, those small decisions add up.
You can find, I used to say the sort of 4 or 5 key things that are big enough that people will spend the time to give you guidance on that one because they can make their commission off of giving that guidance, whether it's real estate, end-of-life planning, your investment strategies, all those sort of things. Those are those big ones. What you're not going to find online are 42 different apps competing to give you answers on childcare. We're on the West Coast here, and we don't have the benefits of the same childcare that exists in Quebec, but here it's a huge component. You're looking at $1,800, $2,000, balancing all of that. There's tax credits. You're not going to find calculators online to do that. And our arguing part of our thesis is there are those big islands that you need to kind of plan for, but there's all those smaller islands that actually have both a financial impact and also an emotional impact on all of those pieces. So the psychology is, as you're figuring out whether you can afford that $1.5 million house with, the sweeping kind of yard, how do you factor in all the other little things that both connect to eat away or add to the success of that choice? And then how does those emotional things add to it as well? Right.
I think like we were saying, there's a bias for the current way people get financial advice, and that's how, in some ways, technology is impartial, right? If you're presented black and white, here's the current situation you have, and some guided ways that you can get to a different situation. I think that's super important because you're not necessarily depending on one perspective with the one-on-one. Although one perspective is sometimes really good, but with technology you're able to see, okay, here's a more open view of what's happening. So in that sense, so in your own perspective, like how does that happen? How do you get that financial overview with tech so that you can make those decisions?
You build an app.
And
our thesis, and it's a bit of a unique one. So this is an I think versus I know. I think you have to get it out of your head, and you have to get it in some sort of format that both you and the other stakeholders in your life can digest. So for some people, a spreadsheet can get you some of the way there. But I put a spreadsheet in front of my wife and her eyes kind of glaze over. That's not her kind of world. So I think technology, and there's a wonderful way that technology can start to, in our case, visualize it, or for other sort of people, quantify how all these pieces kind of connect together and being able to see the long game. Most people are plugging numbers to an online calculator that tells you what life is going to look like in 6 months, but not able to see what those islands look like 5 years, 6 years, 7 years down the road.
Yeah, Neil, that's a great question. One thing that we really try to focus on is, we really feel that there's a huge value to having, that all-encompassing platform or being able to get that advice for those big decisions. But one of the things that we really focus on is getting people even in that momentum. And where we go to those smaller micro decisions to just start building your own confidence. When people talk about financial planning, traditionally that was really reserved for high net worth individuals. To John's point, where can they make the biggest bang for their buck? And I think with technology and things that, we're doing at Sprout is trying to really focus on that, building momentum and building, you know, actual confidence in yourself. And I think, again, that happens two ways. One, realizing that a lot of other people have the same problems that you do, but then also then doing something about it that's going to help. Because we feel that if somebody takes one step in the right direction, an app, kind of to Jennifer's point, where they were a lot more singular with their actions, it's still going to give you that momentum and you're going to feel good. And then you're going to go search for the next problem or question. So I think part of it as well is that getting people into the mind frame of first, you know, those emotional things need to be brought up so that people understand that a lot of people have credit card debt. A lot of people are graduating with student debt. A lot of people are going back and living with mom and dad. Not things to be embarrassed about. It's just the reality of our situation and our society. So we just need to look at what futures are realistic for people. And then you got to work hard to get there. That's the one thing that technology is not going to replace, is you still got to make decisions and you still got to live with those decisions and you got to work hard.
Right.
I think also that there's a challenge there to, no one wants to be told that they're overweight, right? So a lot of the technology there, so finding a way to bring financial literacy and also the potential for financial success in there, as opposed to just technology solutions that say, you're in trouble, you're in trouble, you're in trouble. People will turn that off. Ignorance is bliss, and they're trying to live their lives. They don't want to have that alarm down the back. So there's a real subtle art to the nudge, letting know when somebody's falling off track a little bit and how you nudge them on. And also there's something beautiful to letting people know when everything's going to be okay. I think that's a really important thing in the psychology of becoming more comfortable with your financial choices.
Yeah, let's, so what are some challenges for this from the psychology perspective? So we mentioned the nudge and why it's needed. So in this current situation, what are some challenges people face when making a decision to make an investment or to save?
Well, I think when it comes to people's finances, you know, you really have to look at your situation. And kind of like John said, you really need to start with, you know, where are you and what is? And that's kind of, you know, what we focus on something very simple at Sprout is just your cash flow. You know, you need to understand how much you can safely spend, because it's not your bank account that matters. You know, we're kind of against the bank balance. We would rather you plan and make decisions based on cash flow and not what's in your bank account. And I think that's kind of the catalyst to being able to start saving and investing when you start creating these cushions all over your life, so that you really can handle financial shocks, uncertainties, unexpected events, just like this COVID pandemic that is, you know, blindsided the whole world. I think this should be a very big wake-up call for people for the rest of their lives to say, you know what, we really need to protect ourselves and our families financially, because no one else is going to do it for us.
Right.
We're wired to short think term. I think that's one of the challenges in this. That's the way our brains work. And I think technology has the opportunity at least to show midterm and long term there. We've got to get people thinking and seeing the long term. And that's daunting, right? But I really think that's the opportunity.
Right. And I guess that's where the technology comes in. You know, it's like we discussed with Jennifer, it's like those automatic, something that you can not, you know, necessarily have to put too much thought into, so that at least you can, you know, you can concentrate on the important things in life, right? And having that automation is very important. So what would you say are some big decisions then? So you were mentioning the smaller decisions before. So now once you discover what you can spend, let's say, so what do you do? What do you do with your money?
Yeah, one of the great things is, you know, with the tool like Sprout, right, you're going to know, kind of to John's point, very quickly what situation you're in. But the best part is that we try to show you exactly where the money's going. So that's kind of the second part. How much can I safely spend? And then where was all that money going? And we really kind of have a very simple philosophy of compare, contrast, and prioritize. Because basically when you we have a saying here where we basically say you can't unknow what you know, but don't know what you don't know. So it's kind of to John's point, ignorance is bliss. But the second somebody finally explains something to you or shows you something, you can try to ignore that. But subconsciously, when you go to make a purchase, that understanding will pop into your head. So we hope that it will change your actual behavior, just knowing how things will play out. And yeah, you have to make decisions, whether large or small, and you have to prioritize. So when you can clearly see, like John's point about if I do this, what does it turn into, or what am I sacrificing? Then you can kind of remove the emotional component and just make a logical decision. Like, do you want this more or do you want this more? And I think what the challenge and the opportunity with technology is that once you make this decision that in reality might take 6 months, a year to achieve, the actual technology can keep you motivated as you inch towards those goals. Because the reality with finances is that if you're trying to get out of debt, it's probably going to take a few years. So how do you keep yourself motivated and keep your eye on the prize? I think that's where technology can really, really help people as that support, but not really the driver.
Interesting. And like,
well,
what
we
are
have a
those?
saying that the only thing worse than a bad decision is no decision. All right. So if getting education, understanding how all these different islands, what they mean to the bigger picture, and then making some choices. I think a lot of people sit on decision paralysis and don't make any of those. We all know that, on the West Coast here, we should have our earthquake kits, and most people don't. All right. It's just not thinking that far out. So, nothing worse than a bad decision, fine, no decision, worse.
Yeah, exactly. To John's point, and same thing, I believe Jennifer said it. It's, you learn through experience. So the whole point is to start failing quicker, faster, and earlier. So by the time you're, 5-7 years into financial management, investing, you're going to really understand a lot. And that's, finances is a long-term game.
And what long-term, what would, so we talked a little bit about opportunity cost before. So if you have to make those decisions for these larger investments, let's say, because there are many different vehicles. So what have you seen in terms of like what's a good goal to work towards? Is it investing in a house, or is it stock, or is it what do you work towards, and how does that factor into decisions?
Sure, John, you want to start with it?
We don't try to make recommendations in our world. We just try to lay out information and allow people to kind of get there. And being a collaboration platform, you can bring in all those people that are experts a little bit. So, for some people, buying a home is a fantastic thing. For some people, living frugally and traveling the world is a fantastic thing. So everyone's definition sets differently. And as long as it nets out on that bottom line, that you can't travel the world and own your home and, CD&E. So I think it's very unique. It's very individual and very personal. So I don't give recommendations. Our goal is to just lay it out on the table there in a way that people can understand and make their best decisions for themselves.
Yeah, absolutely.
Yeah. From my side, just obviously being a former financial advisor, I don't mind making certain recommendations when it comes to, the way that you should kind of set your foundations. I think everybody can agree that you need to be able to handle financial shocks. So I think those types of scenario analysis with the classic, what if my car breaks down? Do I have $600 sitting in the bank account? What if my dog breaks his leg? Do I have $2,200 to spend on that? What I found through my years of financial advising, when people accumulated debt, 8 out of 10 times, it wasn't actually because of frivolous spending. It was just because of lack of planning, lack of, foresight into the next 30 to 60 days, and not having those cushions. So one of the things that I always say is, you have to have, your 6 months of fixed expenses there, very traditional, but 3 to 6 months. But what people don't realize is that when you actually have that, you feel better. You actually feel the momentum. You feel, wow, I can handle something. And what happens is that it becomes, a habit. And then you just shift that type of savings into a different direction. So when you say, save or invest, we always kind of say go back and forth, because the habit is to save. And then you just take that money and you just put it into that now investment side of things. What vehicles you want to use. At the end of the day, it really depends on where you are, starting with something very simple like a Milo or like a Wealthsimple to kind of get your feet wet, start understanding how markets work, how equities and bond markets, and just how things fluctuate. You really need to be comfortable to understand that your money will go down. That's what I used to always say. It's like, we're not worried about making money, we'll make money, but are you going to be able to hold on long enough to make money? Because the markets will go down. So the vehicles, I think, are just really more about your investment savviness and understanding. And the nice part is in Canada, we have a lot of really good ways to make your money grow. So I think it's more just about getting started and having that foundation so that when, stuff hits the fan, which it always does, you'll be prepared.
You heard it here. Stuff will hit the fan. My philosophy in life. But I mean, I think you both make extremely good points, is that you have to have something that gives you the psychological support to make good decisions, right? And it doesn't matter what those vehicles are. And there are so many, like you said, there's so many options out there for what you can and cannot do with your money. Then instead of necessarily focusing on that, is focusing on, making yourself comfortable with those decisions. And and it's funny because you pointed out What If I, and John's What If I software does a little bit of that. It's interesting how that works.
Yeah, so, plugs everywhere.
There you go. You're getting a free plug.
Yeah.
We
talked before about the psychology of choice, and that was a big one. The psychology of choice. There's a lot of science on what happens when we are overwhelmed with choice, and we actually tend to make worse choices when we're overwhelmed with those choices. So really kind of doubling down on the psychology piece. It's not just as simple as being comfortable in knowledge base. It's there's science that says that when we are in financial duress, or we think we're in financial duress, we perform more poorly, and that's a big part of it. So the psychology is huge.
Mm-hmm.
Fantastic. Well, I think that's a really good place to end it off in terms of that discussion. I really appreciate what you say about that. And I think it was a really good way of segueing between the landscape and decisions and what is really important is the psychology of it. Finance can be very psychologically stressful, and technology is there to take away a bit of that stress and make it easier for you to make those decisions for yourself, to be informed and to be able to work towards those milestones. So thank you so much to both of you. But we're not finished. So we're going to open up the floor to questions. We have one already, and we'll wait for others to bring in more questions too, if they have any. So here we have our first question from the audience. And Jennifer, oh, good. Welcome back. So this is open to everyone. There's no specific order, so whoever wants to answer first. What protections are in place if a company files for creditor protection? So this is less on the consumer side, more on the business side. From your own perspective, I suppose, what protections are in place when a company files for creditor protection?
So I can speak about how Milo is set up for that. So we have an asset management company as part of our company, and they're regulated by the AMF in Quebec. And the way that the funds are managed is that the funds that you invest are held in trust by a custodian. The company that manages ours is called Fidelity Canada Clearing, and that company is insured with the Canadian Investor Protection Fund. So the funds that are invested with Milo are protected by that type of insurance. So that's the security that we give to our users, in addition to obviously all of the other security and privacy protections that we provide.
Fantastic. Yeah, I think that's, I don't know if you want to speak to that as well, because I think it's a different perspective, but I think that's important for people to feel safe, like we just discussed the psychological aspects of it. And if you're going to be putting money into an investment, you should know that it's safe. So perfect, thank you so much. I have a question from Elizabeth. So more to John and Matt. When she was speaking to you yesterday, she thought that Sprout and What would make a good combination. So just a shout out from Elizabeth that she's happy to see you both together. Do we have more questions from the audience? It could be related to psychology, the technology of investing and saving, what is out there for consumers. I'll leave it up to the audience. Let's see here. Okay, I have one more here. What do you think are the biggest challenges that fintechs are facing now? Oh, good question. So open to everyone there.
Sure. Well, I'll start just from our stage as an early stage company. Some of the biggest challenges that we are facing is just basically getting, the name and the solution out there. So much to kind of how Jennifer mentioned about the start of Milo, where they really focus on the user feedback and also trends. I think for small, young companies, it's just very difficult and challenging to get out there and let people know what our solution is and what's available. And then as well, just, for all fintechs, and I think the country is doing a good direction and going in a good direction for this, is that the security side of things. It's just making sure that obviously things are secure and, privacy is being respected. And I would say those are the two biggest challenges for just smaller fintech companies, is getting the solution in front of more people so that we can get better and grow and provide more solutions to solve more problems. And then just making sure from a consumer standpoint, just making sure you ask questions if you wonder about what a company's doing with your data. It's all part of the rules. They have, the policies and procedures to respond. And I think that's going to give you that safety, right? To try new things, try new products that can help you.
Great. Anyone else want to take a stab at
I
it?
would say perhaps it's changing mindsets. So back to that psychology piece again, right? And anyone can create a formula for getting people to embrace those formulas. That mindset piece, I think, is huge.
Yep.
And I think the other piece is the fractured nature of the fintech landscape. And there are 72 apps for that vertical, and 72 apps for that vertical, and 72 apps for that vertical. So as we start to see these things come together, it starts to answer that. Here's all the pieces under one hood, and I can see those. So it'll be interesting to see what happens with the sheer volume of fintechs, and whether those ones that are hitting in little tiny verticals can scale out enough to be larger, or whether you're going to have that challenge where people are doubling, tripling, quadrupling the number of things they are touching to try and get their financial picture.
Good point.
Cool. So we have a lot of questions, so I'm trying to power through them. So that one was from Billy. Thanks, Billy. And we have another one from Elizabeth, actually. So John made a good point about, we know we need to lose weight, but it's hard. How do you get all engaged better to get people to get over that inertial lag? So how do we get over that hump, basically?
Well, I think some of the really cool things that have become more popular over the last, I want to say 5-6 years, are definitely behavioral science and gamification. I think it's something that we're trying to kind of build in the core of Sprout, is that engagement factor, especially when it comes to finances, which, like I said, 2 points, which it's a very long-term game, as well as sometimes traditionally a more drier subject. So just trying to be able to engage people, just to come back, to just stay on top of it. And just build that momentum and try to make it a little bit more fun than, your traditional spreadsheet.
Yeah, I think that's a really great answer. The way that FinTech can do this is by breaking hard things down into easy, actionable steps that don't require a lot of effort, that just make it easy, because things that require behavior change require a lot of energy to pursue over time. And so having something where you can set it and forget it, and know that that at least part of that problem is taken care of, and you can come back and check on it from time to time and see how you're making progress towards that thing that you wanted to do.
Everyone needs a win.
That's right.
They need that small little.
Let the wins pile up and use that momentum to go on and tackle new challenges.
Exactly. Casino mentality.
Cool. Thank you. So thanks, Elizabeth. And now we have a question from William. I love how you mentioned that we need more transparency in finance in general. How do you see fintech companies addressing this issue, transparency?
I think that it comes down to a fairly simple formula, which is first break complex things down into smaller things that can be communicated simply. So wherever it's possible to make something simple on the outside and bring the complexity on the inside when we develop products. Second of all, try to communicate as clearly as possible. And to do that, you need to user test. You need to not just say, well, that makes sense to me, and know that the pitfall that financial services usually fall into is using a lot of jargon or putting some branding on it that makes sense to them but doesn't make sense to the consumer. So use simple language, test it rigorously so that you get feedback on what you're doing. And then the third part of it is making human assistance available so that when people have an issue, they can easily get access to it. So that way you can support a process that's going to be transparent and make sure that people can get answers to the questions when they need it.
Fantastic. All right, good. Well, thank you. And thanks, William, for the question. Question for Jennifer from Ev. What protections are in place? Oh, sorry, we just did that one. I'm going through quite a few of them.
Still investor insured.
And no, so we do have another question though. Do the platforms cater to students too? If yes, in what way do they specifically add value to the student community relative to the average user? I love this question. Whoever wrote it, no need to be anonymous. That was a fantastic question. So open to the floor.
I think there's some huge challenges there because I think a lot of us start with these noble ambitions to service the entire market, whether it's the underserved or the on their way to being better served. But the business model makes it a challenge there too. So the same pressures that a seasoned financial advisor has, where the high net worth client is the one that will pay their bills versus the spending the time and investing on someone who doesn't. That same cycle repeats itself even in the investor community. So as fintechs go out looking for funding to do their things, servicing those markets, whether it's a student market there, that's a long game and it's a wonderful game and it eventually will pay off there, but it doesn't have that immediate VC return there. So I think that's the challenge, is finding ways to do that and be profitable at the same time.
Mm-hmm. Yeah, I would say that John hit the nail on the head when it comes to that side of the business model side. I'd say, you know, for us, when we're our vertical is looking at the new earners, people that are just beginning to their careers. For students, I think when it comes to their financial management and what they're looking for, kudos to any students that are really worrying about that. I think that's amazing. I know myself, I graduated university with, $45,000 in debt. And, that was a catalyst for me to do a lot of the tough decisions that I had made in the last, 10 years. But if you're worrying about your financial management and things like that at that age, kudos. But I think one of the things, again, I just go back to is that, you're not used to most likely a bunch of bills coming in, having different types of pressures. You're probably more in an exploratory stage or learning. So taking up things like trying to educate yourself on investing, how to invest, how to make sure you avoid major pitfalls. I think that's a big thing. And as for Sprout, us obviously being early stage, we fit into, students because we're really a very simple, app to use, where we want you to just understand that monthly spendable, how much do you have to spend in the first place, and then make your decisions based off of that. So we try to at least be friendly to that, but to John's point, you can't be everything for everybody.
I'll just add on to that if I can, sure. Neil. So with Milo, we are aiming to cover the full market, but we think that what we have is working really well for students and people at the early stages. The median age of our users is 24, so definitely we have a lot of young millennials and Gen Z coming onto the platform. So we think that it's working pretty well for them. In terms of things that are specific for the student community, we have our financial education content. We have a great blog called the Roundup Magazine, which is available, and we do have content specifically for students on there around managing student debt and around making a budget if you're a student. So we are making efforts, particularly with our content, to tailor things for the student market, because it's a core part of our user base.
Fantastic. And I agree with it goes back to lowering the barriers, financial literacy, and like you said, Matt, it's a good problem to have if you're looking for a product right now as a student. So fantastic. Glad you're looking for that. So we have two more questions. We might go a little bit over time because we have a lot of great questions. I hope you stick around for them, and maybe about 5 minutes, because we have two more to just get through here, and they're really good. So from Kasim, how do you reconcile people's biases toward personal finances and enabling technology through interface design? So do you test the products beforehand outside of their functional aspects? Sometimes they're confusing and strengthen the barrier. So about user interfaces, and how does that factor into the barrier eventually?
I can jump in there if you like.
Sure.
So we can geek out seriously on this one, Kasim, if you want. The great thing about working on a personal finance app is that you have access to a lot of data as people are moving through it. So you're easily able to see where people get stuck, where, where something goes the way it's not supposed to, and to systematically address those. We also get, a lot of feedback from our customer success team. So we're handling around 15 to 18,000 inbound queries every month. So we have a lot of information about what's working and what's not working for people. We have platforms where when we're developing something new, we use video-based user testing. So we watch people go through and ask them, when you click on this button, what do you think is going to happen when you go to the next screen, and be able to work out the bugs with all of that. So definitely it's a pretty rigorous approach to be able to make things work really smoothly and frictionless. And it's something you have to be always on top of to develop a strong user interface. So I love this stuff. So thank you. Thanks for a great question.
For us, and I apologize, nose in the background, but
sure.
We're design, because we're a visualization tool, that design piece is huge. And it's really, really hard actually. Because you're trying to, finances is complicated. There's so many pieces to it. And how do you make that as simple as possible? And we don't have the same resources on my level yet. We're still early in our pieces, but it is just getting in front of people, family, friends, tested. Why didn't you click on that button? You didn't even see that? Oh, okay. And just adjusting to that one. So look forward to being a scale where you can send it up to 500 people, and there's all these services that will test it for you and let you know what happens. But I think the design piece is probably, anybody can do the math. It's the design piece is actually a differentiator now.
Absolutely.
Yeah, and I agree with John. Just being at our stage, we're just trying to talk to as many people as we can and get and collect as much feedback as we can for things that are working and things that aren't working, things that are confusing, why that icon didn't, resonate with somebody, didn't think it was that. The one challenging thing with technology is that it's always evolving and it's always trying to get better. And I think in Canada we have a really good ecosystem for that, and I think people understand that, and I think that's why it's such an exciting time in fintech, because people are looking for solutions, and the reality is that people are going to forgive some of the learning curve that we need to go through, and just remember that banks have been around for over 100 and some odd years, and fintech is really just kind of getting going in the last, let's just say 10. And so the best is yet to come. Let's put it that way.
Yeah, and I'll just echo what both of them said, that even if you're at the early stages, that if you're putting together something that you want to have people use, that kind of guerrilla based user testing is actually the best way to do it, is to sit down with somebody and watch someone navigate through it and ask them questions about how they understand things. And you learn so much by getting user feedback rather than making assumptions about how it should work when you're the one staring at it all the time.
Cool. Well, those awesome answers. So thank you. I get, it's an exciting topic. I really love user experience myself. I mean, it's because you're dealing with how people use your product, and it really reflects, like the question is about, like, how can you diminish that barrier? So thank you so much for the question. We have one more, and I think it's really appropriate way to close it off. So it is from William. I agree that we need to learn by experience, but what would you say is the minimal background needed to start managing money? But more specifically, what I like about this is, do you have any favorite resources you like to share? So maybe we'll keep it to the favorite resources part, because we're running a bit over time. Sorry for both the first part, William. But so can you share quickly, what are some great resources that you think are good for that?
One that I love is a book from an American personal finance person. It's called the Index Card, and it's a real simple explanation of about 8 basic building blocks of smart things that you should do with your money. So it breaks things down to really simple rules of thumb and takes you through them. And I just think that's rock solid, just having simple rules of thumb that you can follow about your money.
Cool. Anyone have that favorite book?
Matt, I'm going to defer to you. As I mentioned, my background is design, so I don't have the finance talk to give people the guidance on that one, so I defer.
Put you on the spot.
Yeah, I'd say I can't give you any specific ones, only because I haven't really read any in probably about 10 years since I became a financial advisor. I was more sticking to the actual things I had to do with people. But I think from a resource standpoint, if you're just starting out, I think there's a lot of value in the social side of things. I think you should try to find blogs, people, vloggers, influencers that are actually going through the same problems you had. I graduated university in 2007. So didn't exist. But I know I would have felt a lot better if I knew how many people in Ontario were also, graduating with $40,000 in debt. I wouldn't have been also very shy, very embarrassed, and kind of kept all that to myself. So I think if you're just getting going, I think being able to try to find people that are living the same lifestyle that you are is a great way. And then of course, all the different types of fintechs, read their articles, read their blogs, you'll start understanding more. And then, yeah, kind of to your point about your question, just about, self-managing your money. If you're just starting out, I would always focus on how much can you afford to lose. That's what I would be focused on. So answer that question. If you're just starting out, put your money on the table, put $100 and take away 50 and pretend that you don't have 50 anymore and see how you feel and work your way up from there.
Interesting advice. I like that. So that's a great way to end it. So thank you to our panelists. So thank you, Jennifer, Matt, John, fantastic session. And thank you to the audience for these questions. They were wonderful. And just to come back to financial resources. So I think that it's really important that people have access to the Fintech Cadence allows for that as well. So just a quick shout out that we do have more webinars coming up. So if you do want some more resources to learn about Fintech, we have 2 more left in the University Series coming up, May 14th and May 21st. And if you're interested in learning more about the Formathon, kind reminder, it's on May 28th. We'd love to have you as a participant. And again, a good way of learning is experiential, so is getting involved. We have a code in the chat. And since we're running over, I'll just say a big, again, thank you to all 3 of you for being here. Thank you to everyone who attended. And we hope to see you again next week.
Thanks so much for having us. It's been a great conversation.
Yep, thanks for having me as well. It's great, everybody. Have a great day.
Thanks to everyone
for the great questions.